Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Connect, president of Universal Accounting Center. And for more than 20 years, I've been working with accounting firms, helping them start and build successful accounting, bookkeeping, tax businesses. It's here that we actually focus on the show on those things that matter as it relates to building a thriving business, offering quality accounting services, and getting paid what you're worth. And every episode is filled full of excellent information, and here I have the experts to actually share those insights. Today's going to be an excellent example of that opportunity because I've got Greg Kyte on the show. He is someone who has had 2 podcasts. He is more or less simple terms, a fractional CFO, if we can say that, for 4 services where he's actually assisting individuals as it relates to medical, more or less property management. He'll dive into that, but the point is we've got some excellent topics to discuss today. So Greg, welcome to the show.
I'm so happy to be here.
It's my pleasure. It's great to have you on the show. One, as a fellow podcaster, this is going to be a lot of fun.
Totally.
So give us a little bit of background as to your experience in accounting. You're a CPA. Where did it start? Why accounting?
Great question. If you want to go back to the very, very beginning.
Very beginning. You're a little egg, sperm comes together.
Close.
Okay.
My mom was a pharmacist. In 1985, she opened her own drugstore in Mount Lake Terrace, Washington, a little suburb of Seattle that I grew up in. And it was a partnership that she was supposed to take care of the pharmacy part. Her partners were supposed to take care of all the front end stuff of the business. And as too many partnerships go, they immediately had massive conflict and hated each other to the point where the partners just literally walked out, flipping her the bird out of the store. And it was like this is how I remember it. It's probably not exactly like this, but it was like in the summer. I was out of school. I was 14 years old.
I was going to ask how old you were.
Yeah, 14. And my mom was like, so you now work here as a cashier at
a pharmacy.
At a pharmacy.
So you're a drug dealer.
I was a drug dealer on the corner of Mount Lake Terrace. Yeah,
all right.
Working. I mean, my mom was the drug dealer. I was more like one of her henchmen.
Okay.
But that. So I started as a cashier. The business just struggled for most of the 10 years that she was in it. And at one point, one of my aunts had been doing the bookkeeping, and she just couldn't pay my aunt enough to keep her around. So she was like, "Hey, so Greg, you're now the bookkeeper for the drugstore," and I loved it. I loved doing bookkeeping. But once I finally got into college, I was great at math, so I was making a decision between going into math education or going into accounting.
All right.
I went into math education, so I was actually a middle school math teacher for 10 years. Hated it, couldn't stand those little bastards. And so about 6 years into it, I was like, how do I get myself out of this career? And I was like, well, I chose wrong the first time through. So I started doing night school and went back on my bachelor's in accounting, got an MBA with an accounting emphasis so I could sit for the CPA exam, did all that stuff. That was kind of at the very front. That was it was during the Great Recession. 2008. Yeah, 2008 happened while that was my first year of my MBA program was 2008.
Uh-huh.
So we were on the front end of doing online classes and stuff like that. But everything I could do, evening independent study online, I did that to get my MBA and my accounting degree. So I actually finally got into the accounting profession in my late 30s. And it was weird being me being in my late 30s and everyone else at my same tier in the accounting profession being in their early 20s.
Oh, yeah.
So I was like going, I got to do something to basically catch up with where I should be at this age in this career. So I hustled constantly to try to do different things and to try to jump the line where I could.
Well, many of the people I work with actually experience something similar to what you described because they go through that career transition. They go into, let's say, one thing, and then midlife, 30s, 40s, they find themselves transitioning. And that's similar to what you experienced. You in your 30s, going through night school, becoming an MBA, and then getting your CPA. Yeah. That's an excellent trajectory. What did you find that allowed you to then excel in the accounting space that was lacking in the education?
I think a lot of it was just gumption. Okay. I knew one of the things that I knew to do was to get involved with professional organizations. Okay. Which first was so I became a student member of the AICPA. Yeah. Which was
smart.
Sort of smart. sort of not. It didn't. There were no like real world benefits. I just started getting the Journal of Accountancy every month. That was the only. Which also funny. So I don't think we've broken this topic on the podcast yet, but I'm also a stand-up comedian, which I started. Let's say I started doing stand-up in 2002. I started my career in accounting in 2008. So I'd been doing stand-up for about 6 years longer than I'd been doing accounting. And so what I would do with the Journal of Accountancy is I'd read it cover to cover. That was part of it. Even though every month, Journal of Accountancy, front page to last page, a lot of the stuff I had no idea what I was reading. But you're sort of picking. It was almost like like watching TV in another language to learn the language. It was kind of like that. Where it's like there's a lot of this I didn't understand, but enough of it I did. But then I would also write jokes about the articles where I could. So that was one thing I was doing, but there wasn't a whole lot of like networking that, there wasn't with the AICPA being a national organization. It's not like I got to glad hand people or make, really network with that. So that's when I found the UACPA, the Utah Association, and I became a student member of that. They had basically lunch and learns about once a month down. Well, we're in Utah County, so it was down by University Mall. They would have they'd have a monthly lunch and learn, and I'd go to that. And even though I was again in my late 30s, everybody was so excited that a student was coming to the UA. I was the only student doing that, and so all of a sudden I became like this mascot for the Utah County chapter of the state society, and to the point where firms would be like, put his tab on ours, we'll take care of him. And that was where I really got to start networking with people. So I had a job offer before I was done with my my undergrad to work for a mid-sized local firm down in Orem. So got right into that, and
it paid off.
It totally paid off.
Exactly.
But then even there, I asked if I could do 5 minutes of stand-up comedy at the beginning of every staff meeting.
Oh, did you really?
The accounting firm, and they said I could, but it was all Journal of Accountancy jokes that I would do at the beginning of the.
You should have been doing it at the lunch and learn.
Well, listen, I ended up kind of doing that because I then. With my background in teaching and my new skills in accounting, I quickly got into teaching continuing education classes, which got me back to the lunch and learns. And using my stand-up comedy skills made it very entertaining. So,
all right. Because you brought up the comedy, I'll dive over there. Okay. So you were doing that before accounting.
Yes.
So how did you see that accounting was applicable to your routine? I mean, putting that into the routine. You've got an audience.
Yeah.
You felt that the information, the dialogue you were bringing to the stage was relevant enough that they could find it humorous?
Oh, yeah.
Oh, interesting.
For sure.
Okay.
Yeah, they so that's the interesting thing with stand-up, because a lot of people are like, that's so weird, you're an accountant and a comedian. No one would ever think those two things mix. It's actually completely the opposite. In my perspective, it's completely opposite.
Okay. Because
the most fertile soil for finding comedic material is the driest stuff ever. Because because in stand-up comedy, in comedy in general, you're just looking for stuff that's weird. That's and I mean, the United States tax code, there's so weird. There's so many things that just don't, where you're so many things. And also the interest, because part of it is finding things that are weird. The other thing is finding things that are relatable, but everyone can relate. I mean, specifically with taxes, everyone can relate to taxes because everybody's got to pay them. So I kind of, and the other thing that's very important in stand-up comedy is you want to be doing comedy that's real to you and that's unique to you. Because if I write a joke that you could tell and it would make just as much sense if you told it as I told it, who cares about that joke? That's just like a street joke, like a knock-knock joke kind of thing. But if I'm telling material that no one else can tell because they're not accountants and it doesn't make sense for them, that's much more powerful material to be able to tell. So I started writing it just because I'm like, this is my life now. And I found all these other things that it was. And I mean, I just did a show, what was it, it was just last Friday up in Park City. And I have a good chunk of my material that's still accounting stuff. And I don't know what it was about that Park City audience, man, but my accounting material destroyed up there.
So you nailed it.
Yeah.
All right.
Yeah. Yeah.
So were you the opening act, or were you actually the lead act?
It was a what do they call it? It was like
Improv?
a feature set. No, it was like
Okay.
what are the gosh, there's a specific name for it, but I can't remember. But basically, there was no headliner. It was just a bunch of people. There was about 6 of us that we all did about 15 minutes.
Okay, so it wasn't open mic. Okay,
Nope.
very good. All right. Well, that's funny because I was just at Wise Guys.
Oh yeah, yeah.
And-
I've done tons of stuff at Wise Guys.
Yeah, and great show,
Yeah.
and loved the show. But you're right. Just because the comedian has a funny joke, what's making it funny is their unique perspective on it because it's their life. They're taking
Exactly.
something humorous about
Yeah.
their experience and they're adapting it to the stage,
Exactly.
and they're sharing that story in a comedic
Yep.
way. So if you're able to take the accounting and put it in a context that the audience can relate, and then more importantly make it yours, you're owning it.
Yeah. Who'd you see at Wise Guys?
Oh, I forget his name. My son invited me. It's actually somebody popular. I knew you would ask.
Yeah, that's okay. That's all right.
Yeah.
We'll put it in the show notes.
There you go. Put it in the show notes. He was phenomenal, though.
Oh yeah,
He was
Yeah, yeah, yeah.
amazing.
Yeah.
So yeah.
I mean, I'll tell you what. I'm very, very proud of the fact. The guy who owns Wise Guys, I've known him since I started doing stand up, and I've done tons of stuff for him. And some of my prouder points on my CV is the fact that I've headlined. I've never headlined his club that he's got right now, the one in
Park City?
Gateway.
Okay.
No,
Gateway.
he doesn't have one in Park City.
Okay.
He's got, but the one in Gateway I've never headlined. But his original club in West Valley, I headlined there. He had a club at Trolley Square, headline there. He's had a club in Ogden forever. I've headlined. They had a club in Orem for about a year that was like the forgotten stepchild of his empire.
Oh, brother.
And I got to headline that a bunch. So yeah, done a lot of stuff with Wise Guys over the years.
Have you ever done dry bar?
No, because I'm filthy. I swear constantly.
Then you're not going to get on dry bar.
Never. I could clean it up, but I wasn't. I probably should have taken the opportunity to do dry bar.
I love dry bar.
Yeah,
They're fun.
Yeah. They're great.
Yeah.
Yeah.
It's a challenge for you to actually adapt your routine to
well,
that.
you know what? It's somewhat, because again, I mean, I live in the heart of Mormondom. I mean, one of the companies I work for is literally, I can see BYU campus from my office window. So that's how embedded in Mormon land I am. So I know how to clean it up when I need to.
Good.
But
See,
I'm not,
there you go.
And the funny thing is, it's actually a blast to do that, because one of the things, this has nothing to do with accounting at all. One of the things I love to do is I'll be at a show where it's like, this is a clean show, and I will just make sure that they know I am not supposed to be here. I am not a clean comedian, but I'm going to tell you my dirtiest joke, but in a way that I can get away with it here. So I'll tell this filthy joke, but I won't use any swear words, and I won't use any sexual, innuendo or anything like that. And I'll basically yada 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 through the dirty parts. It makes it dirtier because everybody's like, this is a filthy joke, and they're connecting the dots in their heads. And it's a hysterical magic trick on stage to go, I'm coloring inside the lines, but your mind is not.
Interesting.
So yeah, it's a good time.
It is a good time. All right, so let's go from comedy here back into accounting.
Okay.
And I want to get some context because you went into becoming a controller.
Yes.
You're offering CFO and advisory services for 4 different entities.
Yes.
I'm curious, what is it about the CFO role that you enjoy, and how would you define CFO services?
So I love CFO. My job is fantastic. The reason why I enjoy it is because I always have really enjoyed the managerial accounting side of things a lot more than your audit and tax work. I mean, I've dabbled in those, with I spent exactly 1 year at that CPA firm, and then I was hired away by this group of companies to be there. I mean, and again, we were talking about this before we got on the mic. So basically, I am a fractional CFO, but I've got exactly 4 clients, and I'm W-2 employee for those companies, which it has its advantages. for doing it that way. But again, I'm providing CFO services for 4 different entities,
Correct,
and taking care of all of them. But I think that's the thing for me that makes it so engaging to do what I do, is that I am taking care of those companies. They're all doctor owned, so it's medical office space is what I manage. And one of the things I found from working with doctors, because everybody's like, doctors, they're rolling around in money, they got so much, and they're the owners that I report to, they are by and large all doing marvelously well financially. The thing that people don't understand who haven't had a front row seat to the healthcare profession, especially to doctors, is that being a doctor is one of the weirdest professions ever, because if you're an independent physician, you are the big boss of your company, but you're also the main technician for your company. It's like if you owned a HVAC firm, but you had to install every furnace, that's what a doctor is. Because they're the only ones who can go in and do the hip replacement surgery.
they're the product.
They're not the product. They're the technician. They're the one who has to do the work for the product. So I mean, again, yes, it's a service industry. So yeah, they're the product. But anyway, so you got these guys who, they're making lots of money. They earn every dime that they get, because these guys, not only do they, I know these doctors who have cases that start at 6 o'clock in the morning, surgical cases start at 6 o'clock in the morning. They're not done till 4, 5, 6 at night doing these surgery cases. Then they have to do rounds in the hospital to follow up with the patients that they just did the surgeries on. And on top of that, they're trying to run a business. Doesn't work. One of the things that's also fascinating for me as an accountant working with doctors is the volume of stories of doctors who have had employees who have embezzled money from them as well.
Oh, okay, yeah.
And it's the same thing. They don't have time, and often they don't have the expertise to do their own business side of stuff. So they're like going, I'm cutting people open all day. I need you to take
Very
care
trusting.
of this. You have to be, because you just don't have the
expertise.
They don't, or the capacity to do it themselves. So the number of doctors that have had people stealing from them is, like I said, it's disheartening to see these guys who were busting their butts to make their living, and then seeing that they're getting taken advantage of so often by people that they have to trust to be able to do their business.
So what do you do as a controller, a CFO, to put in place things to help protect them from that?
Well, first off, I it's no one would say, well, I'm a horrible person and I have tons of integrity and I'm able to take care of these doctors. That's what I love about the job. I protect them myself I'm the guy who's doing all the stuff to make sure that at least their investment in these properties is being done with all the prudence and everything's happening just right, and that we're maximizing their investment in these properties. So that's what really turns me on about my job, is that I am protecting people, and I'm that what they have, they can be confident, and they can relax.
They can focus on what they're good at.
Exactly. And again, even like I have one of my doctors. I was helping him with he just bought additional space in one of my buildings. And at one point he says to me, because I'm going over these, contracts and legal documents, and I'm going through the numbers with him, and he kind of goes, just sort of aside, he goes, I don't totally understand all this stuff. Just tell me where to sign. And I go, don't, and I'm like, don't ever say that to anyone ever, because by saying that, you're saying, hey, I'm not checking any of this. If you want to steal money from me, it's right here on the table. Just grab it. And that's the sort of stuff that drives me up a wall, is seeing doctors who, and again, it's not that he wasn't being lazy. He wasn't being, that was just the situation that I'd say most doctors find themselves in. So again, being able to protect them and being able to say, hey, you're exposed in these different areas, and let's take that off the table. That's what I enjoy doing. That's what I love about my job.
So as a CFO, what do you find that you're doing as it relates to the properties you're managing and so forth? Is it cash flow management? Is it tax strategies? Is it the business model?
The intricacies of our business are pretty vast. So it's a lot. Obviously, a lot of it's cash flows. A lot of it is just your general bookkeeping. I don't know how much in the weeds you want to get into.
Let's get into the
stuff.
weeds. That's who's listening.
Okay. All right. So what's very interesting about I inherited the business structure that we have. So
Okay.
I didn't implement this with any of the companies that we have. But the basic business structures let's take any given property that we have. Let's say it's got 100,000 square feet in this building, in this medical office building. We have an LLC that owns that property, and the LLC has 100,000 membership units. One membership unit for every square foot of the building.
And you're the controller for this LLC.
For this LLC,
Okay.
Exactly. So if you want to come and you want to buy a 3,000 square foot suite, you don't own that suite directly. You buy 3,000 membership units in the LLC, and those 3,000 membership units in the legal documents say these membership units represent an indirect interest in
so many square foot.
The same number of square footage in suite 325.
Okay.
That kind of thing. And so because of that, if you're trying to buy into my LLC, you go to a bank to go, hey, I need a loan. And they go, cool, what do you have as collateral? And you go, I got these sweet LLC membership units. And the bank is like, we don't care about membership units. And that's their least favorite asset to hold as collateral. But me as the CFO representing the property itself, I can go to a bank and I can say, hey, I need a $20 million loan. And they're like, cool, what do you have as collateral? And I go, well, this LLC that I represent owns this 100,000 square foot building that's owned by doctors. And at that point, banks go, you only want $20 million? I mean, they fall over themselves for that. That's like a dream client for them. So what we do in our building is we go to a bank, we get a big, gigantic loan, and then our owners come to us to borrow money from that. So I get a big loan, not because I need it, but because my owners need it to buy and sell in and out of the property. So my main job, I would say, is basically, first off, the cash flow for that can be, it's a big damn deal, because ideally, the amortization that we have from the bank and the terms we have with the bank, in a perfect world, would be the exact same interest rate and terms for every loan for every doctor in our building.
That's not the case.
That's never the case, because even that, we've got doctors who are wanting to pay off their loans faster. And obviously timing, doctors come in and out at different times. So you've got all these different amortizations. So I'm actually at a point where I've got one of my biggest owners who's going to be paying off their loan in 2025. So I got to go back to the bank and go, hey, we need to change the amortization on the, we basically have to refinance the loan to stretch it out, because I go, my cash flow is not going to match what we need, my cash flow for your payments on your bank. So we were doing great for 10 years, but now we got to refinance the loan to be able to manage, so these cash flows line up.
So I'm curious, when the doctor, who is this owner in the LLC, comes in and pays off early their loan, do you take that and apply that additional payment towards the principal that's outstanding on your loan?
Yes, but the problem is, just like if you make an additional payment on your house payment, that doesn't make your monthly payment.
No, it doesn't.
So that's where we're at, is that then if they pay, and we've had that happen where doctors have come and go, hey,
they accelerate their payments,
or they just go, hey, I have a bunch of money, I just want to pay off this loan.
Yes.
And so one month I've got some, let's say, $8,000 worth of loan payments coming in on this suite, and the next month I don't have that money, but I still have the same payment into the bank. So managing that stuff, there's a lot of cash flow forecasting, there's a lot of things like that. There's also just simply, I have to facilitate I am not a commercial real estate agent, but I act as one very often, which, and again, legal, because I am an agent of the entity that, for which these members, and
Because
again,
you're a W-2.
Yeah, that gives me a W-2. And so again, it's a real estate agent, but it's not, because the actual transaction, again, is with the membership units and not with the real estate itself.
Correct.
So, but at the same time, I show suites to potential doctors who want to move into our buildings. I interact with our attorney to draft the legal documents that have to be in place for the buy-ins and buyouts of these suites. And then I am also a mini banker. So I have all these loan documents, and I have all the amortization schedules, and I have to keep up with that. And again, if people make extra payments at the end of the year, I've got to make sure that the doctors have just this January right now when we're recording this, I'm not sure when it'll be released, but earlier this month, I had to make basically an annual summary report for every single loan, which is dozens that I have, to make sure that the doctors have that. It's basically their 1098, but it's not a 1098 because I'm not an actual bank.
Yeah.
So that sort of stuff that's what I do. And again, I love it. But and then there's also all the basic stuff of just bookkeeping, money in, money out, rent payments that come in, distributions that go out, and then categorizing everything in a great way, because I don't do the tax. Well, I have two entities that are very, very small, so I do the tax prep work for those. But
Okay.
of the four entities, two are very small, two are very large. So the two very large entities, I have to basically, I'm trying to minimize what we have to pay to the tax prep guys. So I do as much pick and shovel work as I can up front to get everything organized just right for when we hand it off to them, so that we minimize the fees that we have to pay for tax prep work. The banks require that we have compilations. It's been nice. We had to have reviews for a while, but they backed us off just to compilations. But same thing there, where I'm working with Eide Bailey right now for doing our compilations, and I want to make sure that I don't have to pay them a dime more than necessary. So I do all the work I can up front to basically go, here's my books, they're perfect. You just have to look through them until you're confident that they're perfect too.
Yeah.
So
in there, you mentioned rent.
Yes.
Are they paying rent, or are they paying on their loan?
So this is, and again, I don't know if this is easily explainable in a podcast, but yeah, they, again, since they don't directly own the space that they have. Okay, I guess let's back up just a hair before I get into this explanation. Like I said, I need to make sure that I can get these big loans from the banks to then divvy those up to the owners. When you go to a bank and get a loan, they appraise your building, obviously, and the main way that they get an appraised value for a building is based on the rents that building is bringing in. So if I'm not showing any rents, they're going to go, well, your building must be worthless because you're not having any rent. So when we have a doctor who buys membership units that correspond to a suite in the building, we also have to execute a lease to that doctor. So they are an owner of the LLC. They're paying rent into the LLC. Once they pay rent into the LLC, that rent goes into three different categories. One category is to our CAMs, or our operating expenses. CAM stands for common area maintenance. So basically, I take that off the top just to keep the lights on and keep the building maintained. And the buildings that our oldest building was put up in 1984, so we've got plenty of stuff that we got to do to make sure that it's still functioning, and it's a great building even though it's 40 years old now. So there's that portion comes off of it. The next portion, so again, let's say you're a doctor in my building. You pay me rent $7,000. Let's say it's $7,000 a month for rent. So maybe $2,000 of that $7,000 I pull off for operating expense, CAMs for the building, and that's expenses for the building. But then there's $5,000 left over of the rent that you paid into me. So you're basically renting from yourself. So that extra $5,000 is a distribution back to you as an owner. But wait, before I give you that distribution, you also have a loan with the building. So I could give you that whole $5,000 and say, hey, you have to actually write me a check back again. So you already wrote a check for rent. and then I could write you a check for all your distribution, and then you'd have to write me another check back to service your loan.
Yep.
So that's a possibility. But we short circuit that whole thing because that's a little bit silly. So I hold on to the CAMs. I hold on to whatever portion of this distribution
that remains
that you need to pay me for your loan, and then whatever's left after that goes back to you as a cash distribution. Does that make sense?
It does.
So we have to have a lease to be able to. So even guys who have their loan paid off, they still pay the full lease amount. They just get a gigantic
bigger
distribution.
dividend.
Yeah, huge distribution check every month. But we have to keep that in place, otherwise
you don't have rent.
Well, otherwise we don't have a loan.
Yeah, because you don't have renters.
Because we don't have renters. Exactly. So again, I felt like when I first started working there, I had no idea what was.
It's a shell game.
It is, but it's not, because again, everything's very transparent. But yeah, I do have a lot of people who come in like new doctors who are wanting to invest in the space, or it seems more commonly I get a doctor that buys space and then their accountant comes and goes, "What the hell are you guys doing at this building?" And rightly so. And again, I think it's because they're also going, I'm trying to protect and defend my customer, my client, my boss, whatever it is. And they're going, this seems overly complicated, excuse me, for what we're doing. And so they want more information. But yeah, in a sense, it's a shell game, but also it's
a crass way of describing it.
It's what we have to do to be able to make everything work.
So I'm curious. Yes, you're retaining the monies that came in rather than paying it out and having them pay back another payment. But I want to ask about the paper trail.
Yeah.
You talked about transparency.
Yes.
Isn't it more transparent to pay them back the difference and then have them issue a second check to actually pay the loan? Or is it easier for you to keep? I mean, granted, if you pay them back, the likelihood of you getting the money, you're waiting for them to write another check. So I get the fact that you don't want to let go of the funds. Don't mistake that. But I'm wondering from a paper trail perspective, you're not showing the money go back to them. You're holding it and then paying it towards the loan.
Right.
So how easy is that to actually account for?
It's easy to account for.
Okay.
Well, I mean, but again, I've been doing it for 15 years. And like I said, when I first got into the company, I feel like it took me about a year and a half till finally I was like, I now understand everything that's happening in this company. But also in the time that I've been there, I've taken great strides towards simplifying what we had. And that's a whole nother story. I'd love to get into it too, about my first manager that I had who was there. We can get into that. It's an interesting story. But to your point of how difficult is it to do
the accounting,
it's not very difficult, because once you understand the different pieces, it's pretty straightforward. There is some extra reporting that I need to do, both to the firm, to the audit firm that does my compilations, because they're very interested in going, okay, how much of this is non-cash distributions? Because the money that I retain to apply to their loan, that's still a distribution. So it still has to be categorized as a distribution. And really, one of the most complex things that I have to do, and again, this is one of my this is what I should be doing right now rather than hanging out with you, but this is a whole lot funner, is I should be putting together my statement of cash flows. My statement of cash flows is it's so difficult to put together, because typically if you have a distribution to an owner, that's a cash transaction. But for me, I have some cash transactions, distributions. I have some non-cash
because I'm
retaining it.
Yes.
That's the most complicated part of it, is putting together my statement of cash flows, because of that one portion of what we do.
And that's one of the reasons why I was asking, is because yes, your model implies you're giving it back, but they actually don't take receipt of it.
Right.
You're retaining it because they have another expense that you're going to be applying it to.
Yep.
Now, so I just want to wrap this up, and then we'll go to your manager.
Okay.
So the point is you get, as a business, growth in yours because you acquire new buildings, I assume.
Yeah. We have not acquired any new buildings since the entire time that I've been.
So that isn't how you grow your business.
We don't. Our business does not grow.
So it's not really a property management company in the sense that you're always trying to grow and acquire new properties.
Correct.
You're just managing.
I'm
properties.
I'm managing several properties that are owned by doctors.
Because once the properties are fully occupied,
Yeah.
I'm assuming you'd want to go take this brilliant business model and go get another building and do it again.
You would if you had the capacity. I mean, again, there's a couple things with that. One is the scaling side of things.
Correct.
And and that's where I think as a business person, I look at my own strengths and weaknesses. And one of the things I'm not good at doing is managing other people. I'm best as what do they call it? It's free agent nation. It's kind of I'm a one man band, and that's how I work best.
All right, good. All right,
and
that's
so because of that, I'm not. Yes, I could scale this business. And the reason why we have as many properties as we do is because again, this was in management cycles prior to me coming out. That was exactly, it's like we had great success with this property. Let's do it again over here. And with that second property, they did not have the great success that they had with the first property. And so the doctors who were like, yeah, let's do it again, a lot of the wind got knocked out of their sails. And the other thing, like I said, I have plenty of work to do with the properties that I have, because it is not just where the property comes, it's full, so cool, done, no work to do there, move on to the next one. There's churn. I'm waiting for the year where I don't have anyone who buys or sells a suite in one of my buildings.
Oh my heavens, okay.
It's very possible for that to happen. It has not happened yet in my entire 15, 16 years that I've been with the buildings. And that's a ton. I mean, again, if you want to get into the accounting and the paperwork involved with the buy-in, buyout, that's when it gets there's a lot of extra work that I have to do when it comes to that. So one of our original building, it's much more stable. The vacancies are basically zero with that building. The other one, I have more vacancies. Turnover at both of them is difficult, and really vacancies in the commercial real estate space, that's the devil. So you're really, trying to prevent that from happening and replacing a vacancy as quickly as it comes around. That's what you got to do. So I don't have any extra capacity to start a new
So do you
building.
have tenants that are in the buildings that aren't participating in this business model?
Yes and no is the answer to that.
How do you have a yes and a no?
Because let me see where's this?
They're
very
paying
specific-
rent, but
Yes.
they're not owners?
Yeah. So every suite has an owner that's not the building.
Yes.
So I have someone who's on the hook for rent for every single space.
Okay.
But most all of them, and we're optimized for owner occupants. So I would say 80+% for across all of my properties are owner occupied.
Okay.
But those other 20%, again, somebody came in as an investor, they bought that suite.
Yep.
But then they're wanting to have a third-party lessee come in and rent the suite.
So they're subleasing.
So they're exactly. So they're subleasing it. So even if that subtenant leaves, I still have the owners who are on the hook for that space. Matter of fact, I own a chunk of a surgical center in one of the buildings, but obviously I'm not a surgeon, so I'm not an owner occupant. So the entity is the third-party lessee. And so I'm if they all of a sudden said, hey, we want to move up to Lehigh to have our facility up there, then all of a sudden, if I've got an empty suite, even though I don't own I own about 30% of this surgical center, then I have to start paying rent for my empty suite until I can find a new lessee to come in.
They currently pay you.
They pay me,
you
and I
pay.
exactly.
Yeah, okay.
Exactly.
All right. So here's the other thing then. With regards to your business model, you were talking about loans and refinancing the loans. I'm curious, as I understand commercial loans, they traditionally last like 3 to 5 years. Am I mistaken?
No, you're not mistaken, but there are some interesting products that are out there right now. So for my main loans for my two buildings, we have a fully amortizing 20-year loan with the bank. But what happens is every 5 years, because typically you have a commercial loan. Our commercial loans were always 5-year loans. Okay. And at the end of the 5 years, you just had to refinance the entire loan.
Yeah.
And there's a lot of fees that are involved in refinancing those loans. So, the biggest one is an origination fee, where it's just a percentage of the entire amount that you just have to cut a check and send it off to the bank for that. And it's a lot of money, and it sucks. So with these 20-year fully amortizing loans, every 5 years they just have an interest rate reset. So in the documents it says our interest rate is based off of whatever index, the spread is this spread, and as of this date, we just do the math again, and that's your new interest rate going forward. It's a
variable loan.
It's basically. But then that new rate is locked in for the next 5 years, and then it happens again, and that's for 5 years. So you have, you have your initial rate plus 3 reprices, and then your loan's completely paid off. So
your loans have gone up dramatically in the last few years.
They went up dramatically. So again, it's only every 5 years we have a reprice. And the last time we had reprices was right at the beginning of when interest rates started going up. Yeah. So we had in the heyday, in the salad days, we had 3.85% commercial loans on our buildings, which is unbelievable.
Yeah, not today.
Right. And then when the reprices happened, those went up to 4.61%.
That's it?
And because again, it happened, our reprice, the timing for the reprice was right when interest rates were on the climb to what they are now. So when that happened, I was like, oh my gosh, I've got a 4.61% interest rate. What am I going to do? This is, even though I remember like 10 years before we got a 5.2% interest rate when interest rates were coming down, we're like going, how did we get so lucky to get a 5.2%? Now I'm below that and still crying about it. But again, we've got, so we're at 4.61, which at the time seemed horrible, but 6 months later, we're like, that's pretty good. The other thing is, and again, this is part of my job, is this weird, which is why I love it, because there's so many aspects to this job, is I've got this whole a finance guy aspect to the job. I was able to, again, this was right before interest rates got crazy. I think it was right before the pandemic. I had the opportunity to do an interest rate swap, which again, it's an instrument that I have no idea why it exists. But basically, the way it works is that so I looked at all the debt that we had. We have these huge prepayment penalties on some of our loans, some of our loans not so much. So I had this opportunity to do an interest rate swap at 2.84%. So basically, I looked at any of the debt that we had that I could get out of without a prepayment penalty, and I refinanced that debt to a straight variable interest rate, where it's just like every month the interest rate on that loan is different. But what a swap does is it says, hey, we have this other partner who would like to take your variable interest rate and pay you a flat rate. Which again, I go, why don't you just go get your own variable? That's the part of the swap I don't understand. Why didn't you just go get your own variable? They're very easy loans to get. Yeah. If you want that loan, why don't you get that loan? But I think there's a lot of speculation that's involved with that. So I was able to execute a 10-year loan at 2.84%. For that, again, right before interest rates went crazy. So I'm like a hero because I locked in a 2.84% commercial loan for 10 years right now. That's bonkers. But even at the time, I mean, if I could go back, I would go, let's, if I knew what was going to happen with interest rates, I was
pay the penalties.
Let's pay the penalties and let's put it all in this variable. But that was sort of my, it was my, you make the best choices you can with information, and there's a lot of very, very strict rules about the interest rate. You can't prepay them at all. Like I can't pay an extra dime of interest on the swap because there's 2 loans that have to be paid kind of in lockstep in this weird, financial commodity that is the swap. So and also there's huge penalty. Well, there can be huge penalties if you get out of the swap early. But that's the other weird thing about a swap, because right now I think I could get a couple of $1 million maybe. I don't know what the exact. But if I like let the other party out of the swap, they would pay me like a bunch of money because they're getting screwed so bad now. The interest rates went bad. So part of the legal side of the swap is that I also have this asset where if my fixed rate is so, whatever the difference is between the fixed rate and the variable rate, they use that, and there's some calculation that you do based on the principal you still have to pay off, where the other party would pay me a bunch of money just to get out, if that makes sense. But there's no way I would do that because I still need the loan for as long as it would, and I have to refinance at 6-7%.
You still need the loan,
right? So so financially, even though I'd get a bunch of money right now, it wouldn't help me in the long run because
you'd lose
I'd end
the
up losing
low interest rate.
Yeah, exactly. And I'd lose all that money with the higher interest rate. Exactly.
That's right.
So, but again, I don't know if this is coming off to anybody else. I think it's fascinating.
No,
and every day at work is like there's a new interesting problem. There's again, it's like this huge. I don't know what game would even relate to, but it kind of feels like, okay, I got to make sure I'm keeping track of this over here, and I got to make sure I'm keeping track over this over here, and this guy's going to pay his loan off in 20 years, and this guy's going to pay his loan off in 4 months, and how do I keep all the cash flow working, and who do I need to have a conversation with to make sure that everything continues to operate smoothly?
I'm going to assume my listeners are enjoying this because I know I am.
Okay.
It's the business sense. It's the model that intrigues me. It's the fact that someone was creative enough to say, no, I've got an idea. Why don't we run a business like this?
Right.
We're going to say, you buy this stuff, we're going to manage this stuff, and this is how we're going to be profitable because we're going to take this percentage and have it to our name. That fascinates me because look at how much brain energy you've put into actually explaining, here's how we're going to run a company. And somebody's saying, okay, that's a business that intrigues me. That's something I want to be involved in. This is something I want to actually implement. That fascinates me. So to hear this, I'm sure is intriguing to my listeners only because they in their own world are running their own business and they're being creative likewise. So that's how I kind of see this. Cost segregation.
Yes.
Is this something that's very helpful in your managing of the properties?
I understand cost segregation. I think in traditional ownership settings, cost segregation makes tons of sense. In my case, I do not know how to implement cost segregation without somebody ending up getting screwed by it.
Really, from a tax perspective?
Yes, from a tax perspective, because
there's so many owners?
Well, not just because there's so many owners, but I've got people who are buying in and buying out at different rates. So a cost segregation study, as I found, is very, very, very expensive, like hundreds of thousands of dollars to do a cost segregation study. So if I end up saying, hey, all of my owners who currently are in the building right now, you all have to pay a certain portion of this cost segregation study, and all it does is it accelerates your depreciation. It doesn't mean you get to take more depreciation over years. It just means that you get to take more depreciation up front. So because of that, I've got and you can do, and I've done this before, where you can do kind of a break even of going, okay, we're gonna pay $100,000. You'll get or you get whatever your portion of that you have to bear as one of the owners in the building. And then after X numbers of years, you've accelerated enough depreciation to make that money back. But the interesting thing is that's also depreciation you could have taken in later years. So it's not like you've made the money back. You've just reduced your taxes to offset what you had to pay. But you can be paying more taxes in the future because you accelerated your depreciation up till now. Now so really a cost segregation study, if you're looking at it from a purely economic standpoint, the only monetary benefit you get from a cost segregation study is the time value of money, because you're not paying a lot of taxes right now. So because of that, you can use that money elsewhere, and whatever you're investing it in, you should be able to get a return on that. Money now is better than money later, that sort of thing. So that's really the only monetary value that you have from a cost segregation study. That's very different from like a behavioral economics perspective of this, because if all of a sudden this year you are going, I don't have to pay $40,000 of taxes this year, then you can go, okay, what am I going to do with this $40,000 I thought I had to pay that now I don't have to pay? That's a whole lot different from a behavioral economics standpoint than, I get to save $1,000 a year for 39 years.
Yeah.
Do you know what I mean?
Yeah.
So you're not going to feel that $1,000 you save for 39, but you will feel a $39,000 benefit you get this year.
Yeah. So there's two things I can see going on. One, you've got competing interests with the number of owners. One owner may say, I need the tax savings. I want it accelerated. This year was phenomenal.
Right.
I made a lot of money. Therefore, I'm going to owe a lot of money. Let's
Right.
actually accelerate it so I can depreciate now.
Right.
The other saying, well, no, this was a slow year for me. I don't have a lot of taxes to pay. I'm not interested in paying for the cost segregation study, and I don't want the depreciations accelerated. So you've got competing interests there.
And there's another competing interest as well, because I'll have a doctor who's like, I'm 70 years old. I'm retiring in 2 years.
I won't have anything.
I'm going to pay a bunch of money for something I'm going to benefit from to the point that's not even going to pay off what I had to pay in.
Yeah.
So that's where I can't. So it's not just those competing interests. For me, it's really just the fact that I've got these buy-ins and buyouts that, again, like I said, are happening every single year. And anytime I execute a cost segregation study, I might not even know who's going to want to buy in and buy out in a coming year.
Yeah, it's
but
just a fee.
Someone who does, but when that does happen, I go, you just got screwed because we did this cost segregation study.
Yeah, interesting. See, I love this. This is interesting. All right, so let's go to the manager.
Oh, okay. So the manager who was there before me, I actually did. So on the Oh My Fraud podcast, we actually did an episode that was based on this true story. And again, I'm still a little worried about like slander sort of stuff, because things didn't go well with this boss before me. I am going to say, I'm not going to say that he committed fraud. I'm not going to say it. I might feel it in my heart, but I'm not going to say it out loud.
All right.
There was definitely abuse of the position that he was in with the building. I'm a big fan of the ACFE, the Association of Certified Fraud Examiners. I was a member of that organization for a number of years. They produce a report every 2 years called the ACFE's Report to the Nation on Occupational Fraud and Abuse. And one of the red flag behaviors that they have identified with fraudsters is a wheeler-dealer attitude. And this guy, he was the guy who hired me. He was as a person, loved him to death. He was a fun guy. He was generous with his employees. He took great care of me. I did not enjoy working at that's how I got the job that I'm at. I didn't enjoy working at the accounting firm that I worked at, but he was one of the engagements I was on, and one of the bigger engagements that I was on. And every time I got to go to this company I worked at, I was like going, this is nice. Everything else I do, maybe not everything, but so much of the other stuff I do, hate it. But this stuff is so nice. So it's after I like to say that after I worked for the CPA firm for 2,003 hours because I needed my 2,000 hours for licensure.
Yeah.
So after 2,003 hours, I quit that job and came to work for these guys. But yeah, definitely a wheeler dealer. So if he had any of the owners in the building who were like had a problem, he tried to fix it however he could. So we have so in theory, there's this general template of ownership for every owner in the building. But he would say, well, here was somebody who was up against this problem. They asked me if I could help them fix it, and I did. So this ownership is tweaked this way to help that guy with that problem. And then here's this other owner that came to me with that problem, and I said, yeah, I'd help him with that. So he's tweaked in this different way.
So they're having different business contracts?
Basically. Yeah, but that was the other thing. He wasn't a very detailed-oriented guy, so there was a lot of things.
This isn't in writing.
There was a lot of handshake deals going on. You know, like for instance, like someone would have a loan, and then they would say, hey, I would like to go buy a boat. Can I borrow another $25,000 against my loan? And he'd just write him a check and go, yeah, we'll put it in. The legal document never changed, but all the financial information changed to reflect this additional borrowing as if it was a line of credit, but there was no language in the loan that said that was doable for that loan.
Okay, so contractually there was nothing that said they could use it as a line of credit, but they were being given access to the line of credit, and they were using it
as if it were a line of credit.
Yeah.
Also, there's something, you know, and again, I know his thinking wasn't wrong in that the loan was still collateralized by the indirect ownership in the building,
Correct.
which is for the LLC going, I can repossess a suite in my own building. That's valuable.
Yep.
So even if you want to borrow that money, it's kind of like a home equity loan. You borrow the money from the home equity loan to buy your boat. the boat's not collateral for the loan, the home is the loan. So it still makes sense from that standpoint. But I think from an ownership situation, there was some owners that go, is it prudent for us to be loaning money as a group of owners so that people can just buy toys? That was part of it. So one of the things that we saw and this was one of the big challenges I had when I first started working there, is we had all these little exceptions to the main rule that all had to be managed. And even though they solved the problem for a doctor that was having that problem in a year, there was like infinite recurrences of keeping this structure that complicated things open, because that complexity wasn't just contained in the fiscal year in which the complexity was created. The complexity went on forever. So a lot of what I had to do is just over time go, okay, we need to not make these exceptions to these rules. The other thing that happened with this owner is that he was not a W-2 employee. Manager. He was not an owner. He was a manager of this. He was not a W-2 employee. He was a 1099 employee. He was contracted for a certain amount every year that was his pay. It was $12,000 a month was his pay back in the when did I start? The early 2000s, late 2000s.
Yeah, that's
is
pretty
when
good.
I started there. Yeah, he was making some good money. But the problem was that, and one of the things he did right is he never gave himself signing authority on any of the checking accounts that we had. But he would have his secretary, who was also his wife, which that was also a little bit. There was a fair amount of nepotism running through this company as well. But he would have his secretary print off a bunch of checks for electricity and for janitorial and for all the different things we needed for the building, and also a check for him for his pay. And he would basically have her print one of those checks out anytime he just needed more money. And at the end of the year, and this is what happened when I first started there, at the end of the year, this is when I was still at the CPA firm, the manager who was over me, because I was still low man on the totem pole, she would say, well, we got to close the books out for the year. So one of the things I need you to do is I need you to find out how much he paid himself for the year and see how that lines up against what he was supposed to pay himself for the year. And first off, I go, that's weird, because shouldn't it be exactly what he's supposed to pay himself for the year?
Uh-huh.
And then it was way over. And it's like, okay, whatever's over, that he also had a loan with the building. Whatever was over got added to the principal of his loan that he had with the building. Now, ask me if there was a legal document for this loan. There wasn't. There was no paperwork. It was a handshake loan for something that ballooned up to the final accounting was $605,000 that he had paid himself over a number of years, that was in excess of the salary that he was supposed to be paid.
So I'm curious on a few things. One, he's printing out checks.
Mm-hmm.
Is he producing invoices to say what that's for?
No.
So there's no documentation as to him invoicing the business. He's just writing checks.
He's just writing checks.
All right. So
Yep.
shame there. Okay.
Yep.
Second thing, with regards to this handshake agreement of what interest rate is he paying?
He was paying this, and again, that's part of the way that the building operates for owners is whatever interest rate we get from the bank. That's the properties don't make money through interest rate arbitrage.
Okay.
So he was getting the same interest rate that all the other doctors were getting, just based on what the interest rate was from the bank.
But you said there was nothing in writing. Was that covered in writing as
Nope.
to? Okay, so
Nope.
technically he could be getting a zero interest loan, like a cash advance.
Mm-hmm.
Okay.
He could, but again, that was clarified to me. Again, I wasn't part of these conversations. I just came in when this was happening, and again, I was working under the auspices of the people who had been on this engagement for years before I ever even became an accountant. So I was just kind of going, so what do I do? Okay, I'll do that. That's fine. But then I got hired in by the company.
Yeah, you're now W-2.
And they went from having no internal accountant to having a internal CPA who's in. So now it's my job to make sure I'm talking to like the board of directors to make sure they understand. Because again, my manager at the CPA firm, she was saying, no, I make sure every year that the people, that the managing members of the LLC understand this loan and that they know what's happened to it, and they, that it's communicated to all this. all of a sudden that job becomes mine when I get hired by the company. I go to them, they go, "What? How much?" It's one of these things where it's like, "What is happening?"
Oh, yeah.
And they were like, "This needs to be shut down immediately."
Of course.
Is what happened. Yeah. And so, and with interest. So again, the other thing, two things are very normal and customary for loans. One is that there's a legal document that defines the loan. The other thing is there's repayment of principal and interest on loan, or at least, there's also interest-only loans. So there's,
Correct.
and obviously,
But it's the terms of the agreement.
There has to be some sort of terms of an agreement. There was never a penny of interest or principal paid on the $605,000.
Which is why I was asking. It's a zero interest loan. It's a cash advance.
Well, it's not a zero because every year we would accrue interest on the loans, but we would just roll it back into
but all
the loan.
he was paying was the monies that he had taken in advance.
Yeah, he wasn't paying anything back.
Yeah.
And the other thing that was very interesting is it was always said that the money was being borrowed so that he could refurbish this cabin that he had in the woods. And so as a result, the cabin was the collateral for the loan. But again, you don't have collateral for a loan if you don't have it in a legal document. So with the interest that had been accruing on this loan, like I said, it was $605,000 that was taken above and beyond what he was supposed to be paying himself in salary. Allegedly, should I still say allegedly?
Allegedly.
And with the interest that accrued on that over the decade that had been happening, it was approaching $800,000 that he owed on this loan because zero repayment had happened.
Yeah, but he's not going to pay that. The interest that's paid is going to be by the owners.
Oh, right. Yeah, in terms of cash flow, yeah, the interest was being paid. You're exactly right with that. So it was So basically here's what happens. I come along, I start talking to the owners. I say, this is what's happening. They say that cannot happen anymore. I have to go to my boss and I have to say, hey, listen, you get paid exactly what's contracted. Even though I never ever saw an employment contract that I don't think that existed either for how much he was supposed to be getting paid. There was so much that was loosey goosey with this organization before I came around. So
you're hiring right now?
No. Well, that's okay. So many. Well,
I'm not interested.
We'll get to that. I'm not hiring it now. I will be eventually. So we cut it off. He started repaying, I think, $400 a month on an $800,000
Well, hold on. In his mind, it's not $800,000. It's $650,000.
No, in his mind, it was $800,000 because I was making sure he knew exactly how much he owed on this loan.
Okay, so at some point, it now gets documented.
He wasn't keeping track of anything. He was just taking money out, and he was going, the money people will tell me how much I owe.
So now you come to him and say, okay, he probably didn't even know he had $650,000.
I don't think he had any
so
idea.
So he's just taking money, and then you come up and say, by the way, you've taken, and at the interest rate you owe.
Right. Well, and actually, let me back up. I do think he knew how much he owed on an annual basis, because I think that the person at the accounting firm who was working with the company before me, she kept track of it, and I know she communicated it with him, and she said she was communicating it with the managing members, even though her communication with the managing members was spotty at best. So I think he knew how much he had been borrowing over time, but he also wasn't paying anything back on that. So that was what was happening. We cut him off. Interest is still accruing at this point, and he's paying $400 a month, which is that's a fraction of what he owes every month in interest on this loan.
Yeah, you're talking like a 90-month loan.
Yeah. It's a 90-month. Oh, yeah. In terms of so he's.
It'll take at $400 a month on an $800,000 loan. He's going to be paying this for
right.
Who knows?
So what the owners then did is they said, and I think this was
a 90-year loan. That's what I mean.
This was very prudent on their behalf. Is that the owners were like, hey, this loan, your cabin is collateral for this loan. Get an actual loan on the cabin and use the proceeds from your cabin to pay off this loan. Because if your cabin is as amazing as it should be because of all the money you've been taking out of this business to build your cabin, you should be able to get a loan that covers he got a loan for like $420,000 on his cabin. Yeah. And even that, again, he has relationships with the bank. He went to the same bank that we had our buildings loans with, and he said, you need to give me this loan on my cabin for as much as you possibly can, or else I'm going to take these loans and I'm going to take them to a different bank. So he leveraged his the building's loans to get his own private loan. And even that, the bank was like, we can't even give you this loan unless you have a cosigner. He was able to talk one of the other doctors in the building into cosign. He says, basically, you cosign on this loan, you've got a 50% interest in my cabin.
You can have a key.
Yeah.
All right.
That's and so he does that. So $420,000 comes back into the coffers. If you're just looking at $605,000, that goes quite a ways to get to the 605. It's only about halfway to the 800,000. And like I said, even that interest is real money cost.
And it's growing.
And it's growing. And then he also had a small ownership interest in one of the other buildings that we had, not the one that he managed, but one of the secondary building that we had built later, that he had gotten through sweat equity. So you're also kind of
sweat equity.
Did you? He didn't put money into it, but he got an ownership interest in it.
Oh wow!
So the building was like, you need to. So since this loan wasn't enough to cover what you owe, you also have to give us the interest that you have in that other building. So they did. They credited him $250,000 for this ownership interest in the other building. His sweat equity originally, when he got it, was $200,000 worth of sweat equity. The other property,
really well.
Yeah, the other property was not doing fantastic, and I was like, it's probably not even worth the $200,000 that he originally paid for it. And later, they sold that interest that they credited him $250,000. They sold it for $180,000. So if you take the $420 that he borrowed plus the $180 that they eventually got, you got $600,000. So they almost got back all the money, all the actual cash that he had taken from the building. But then they had to write off the rest of all the interest that the building did pay on the loan that was then divvied up to him. So that, even though, I mean, and again, as someone who studied lots and lots of fraud cases, anyone who gets back 75%
Correct.
of their losses for fraud, you got to go, we dodged a bullet with that. So that's a huge win there. But at the same time, that other $200,000 that was lost was still real money that was lost, even though
to all the other owners.
To all the other owners.
Correct. Yeah. No, that's a fascinating story.
Yeah.
I appreciate that. It's the intricacies of. Obviously, there's how the person's thinking, and it's also the accountability. Someone is just not being accountable here, but there's the paper trail. I mean, paper needs to be had there, and that's one of the things that I think comes up quite often in these fraud cases. Is it's the gentleman's handshake that can't be traced anywhere.
Right. Yeah. No, that's very, very true. So, and the other fascinating aspect of that whole situation is where the board of directors is like the psychology of the board of directors, because they did nothing wrong. He was the one who did things that were wrong. They didn't want to fire him, because if they fired him, because the board of directors is a subset of all the owners in the building. So if they fired him, everybody else would be like, why'd you fire Sam? And let's go, oh, he stole $800,000 from us. They go, he did what on your watch? So they were worried, the board was worried that there would be this massive upheaval amongst all the owners, pointing fingers at them for not having proper oversight over this guy.
Which is what happened.
Which is what happened, but also, again, think about these doctors. They're hiring him to be their manager. And even then, when he's got these stack of checks that he's going out to have people sign, he'll go to this doctor one time to get him signed and this doctor another time to get him signed. And anyone who's like, is he paying himself too much? They'd have to have their own QuickBooks to be like entering the checks in that somebody else is supposed to be taking.
But they are running a business.
They are running a business. You're right. And
they're just not taking it seriously.
But tell me about that. If you're hiring someone to take care of the business side of your business, you're still supposed to have oversight for that, and you're also expecting the accounting firm to have oversight over that. So I would say the accounting firm also dodged a bullet that no one went to them and said, "What the hell did you let happen?" But again, it was just compilation stuff back then that they were doing too. So there's a lot of times they could just go, it wasn't us, it was you. You're supposed to be managing your own business. But again, who oversees the overseer?
All right. So
that's the problem that we're up against.
All right. So here's where I want to go with this, because I think this story is fascinating. What did you learn from this that you would implement and put in place that would at least mitigate this from happening again?
Transparency to the nth degree.
And how
is what it is.
And where's the transparency going? Who's seeing what's going on? Because you can be transparent, but if no one's looking, who cares?
Right. That's an excellent point. And I don't have a solution for what you're saying about if there's so if you've got a window that's perfectly transparent where you could see
nobody looks in,
but no one ever looks in that window, you still have the same problem.
Yeah. So if you've got a board, and on that board you've got either one or more individuals who are assigned, one of your responsibilities is to review expenses or to approve expenses over a certain amount, or to actually look at things. Or if you've got let's say a CPA firm that's doing at a bare minimum a minimal audit of the account on an annual basis, there's got to be somebody looking in that window.
Right. And that's a problem that I feel like is intractable with small businesses.
Okay, because what we're defining here is that old analogy of everybody thinks somebody's doing something that nobody is.
Right. Exactly. And that could be the case. The one place where I have utmost confidence is in myself.
Okay.
That it's like I as the protector of these guys' investment, I'm taking care of them. Now, that could all be bullshit, and I could be the new bad guy who took over for the old bad guy.
Yeah.
And that's the reality of life. I do everything I can to be as transparent as I possibly can with the owners and with the board. Send them reports upon reports that show exactly what cash is going in and out.
And if no one's reading those,
but that's exactly right. Because it's funny because there have been months where whatever's happened, I just go, oh crap, I never sent out those reports last month. No one sends me an email and go, hey, where were those monthly financial reports for last month?
Yeah.
That never happens, which tells me no. I do get emails back from some of the, and it's usually not from the owners themselves. It's usually they hire like a practice manager.
Okay.
And so I get emails back from them sometimes going, hey, thanks for sending those financial reports. That's what I get that says received, but also I'm confident that they're not.
Yeah.
I'd be surprised if they were reviewing them closely.
So the essence of this is the old statement or analogy of trust but verify. There's a lot of trust, and there's a transparency going on here, but clearly no one is verified. No one's looking in the window.
Right. As someone who, if I was in their position, absolutely I would be looking over those things, and I would be asking a lot of questions every month to make sure that what's happening is what apparently what I know is supposed to be happening is actually indeed happening. That's how business owners have to run. I have a story about this. When I first started working at this company, we again, small business, I have health insurance benefits and no other benefits at all from this company. So I have to take care of all of my own retirement planning. So I was like, I don't know anything about that. I went to Merrill Lynch. I said, hey, here's my situation. I want to start putting so much money in every month, and I just need you guys to tell me where to invest it. I just sent them in the money and was just hoping that they'd do what they were supposed to do. They did a horrible job of managing my retirement. And I finally looked at it and I was like, okay, again, I've got enough financial, skills to go to look at what the market, just like the Dow Jones did over the course of time that I had them managing my funds, and what returns I would have got if it was just basically
just in the S&P.
Yeah, just in the S&P or something like that over these years. And then I looked at my actual returns with this. I had like a quarter of the returns of the market. I went to them as experts and I said, you guys are the experts, do this for me, take care of it. And I never looked into it. I never looked into what my actual returns were compared to what I should have been expecting from that. And once I finally did, I said, you're fired. I'm taking this over from you. Did I mention I don't do a very good job delegating things? I think that's another, honestly, I think that's part of it. I don't trust other people to do a good enough job with my stuff, whether that's my responsibilities at work or whether it's with just my own personal finances. So you have to have, I feel like the way for small businesses to avoid being taken advantage of is and again, we even talked about this at the very beginning of the show, doctors don't have time to even oversee their own staff.
Yeah.
They don't have time to oversee me who's overseeing their investment. So, but if you're really going to be operating your business from a prudent standpoint, if you're really trying to minimize your risk of being in business, you will be opening every bank statement, you'll be looking at every report. We eventually get to a point where that becomes unsustainable, where you can't do it. part of the risk of being in business is the risk of being taken advantage of. I hate that. It's kind of like when you hear about grocery stores who have like a line item in their budget for shoplifting. Have you heard about that?
Oh, yeah.
So it's like we're going to assume so much of our inventory is going to be stolen every year. We got to work that into our budget. I hate that, but that's sort of like what business owners need to be looking at with the risk of having their own business. Yeah, profit comes from risk, but also that doesn't mean that the risk isn't real and that you couldn't lose your lunch. So the more oversight you can give as a business owner, the better. How do we take care of that as, accounting and finance professionals? Encourage our owners to look at stuff.
Make it interesting.
Make it interesting. There you go. And from my perspective, I've always said transparency. Everything that you can, even when it's weird conversations like going, hey, we can't have, not that we have cash transactions with my kind of business, but you can go to your people and say, hey, here's a cash transaction. You shouldn't have cash transactions because people can steal it. Even going, because I could steal that money.
Yeah, the petty cash.
If it's
the cash in the drawer.
Yeah, exactly. So no to that forever. And when you throw it out there and go, I could steal that money, that's a weird conversation to have with your employer of going, this is a bad idea because I could totally screw you. But that's the level of transparency that people need to have to make to just eliminate these possibilities of stealing stuff. And I think big picture to garner trust with their employees.
Yeah, I've got two things.
Employers.
So there's two things I want to add to this conversation.
Yeah.
One is this transparency that we're talking about, the window that we're opening up that we're saying everyone can look in or someone can look in and see.
Yeah.
That's great, but I think the role of the accounting professional is to make whatever's in that window sexy. You got to make it interesting. You got to make it worth looking at. You've got to make it so that the owner or whomever's responsible wants to look. Hey, this is something I want to see.
Okay.
And so I think it's one of the things that we've got to do to take the information we're gathering and present it in a way that somebody's like, okay, I want to look at this. I find this intriguing.
Right.
That's, I think, one of the roles of the accounting profession that we're missing out on, because otherwise that trust isn't verified. And there's that first mistake. So I think one of our roles is to do the window dressing, okay? The second thing I'd like to point out is just to illustrate how this can be taken advantage of and sometimes misused. I was working for a company where at the time we were looking to gather for it was a $25 transaction,
Okay.
a social security number.
Okay.
And we were trying to say, we've got people that we're sending a $25 item to. This is back in the 90s, by the way.
Okay.
$25 item to.
Yeah.
And we were getting a lot of fraud where they would receive the merchandise, but they wouldn't pay for it.
Okay.
And they were saying, well, let's at least be able to collect the social security number so that if we had to, we could take them to small claims, we could find them, all that kind of stuff.
Okay.
This was on the discussion side of things, right? So it wasn't implemented.
Okay.
And so the CFO was like, okay, owner, I like what you're asking. I see what you're trying to do, but let me just say it's not a good thing to do. We don't want that information. We can't use that information the way you're thinking and so forth. Well, anyways, long story short, to prove the case, the CFO actually went down to the exotic car dealership, took the business owner's information, his social security number, the business owners, went down there.
My butt's just puckered up real tight.
All right, went down, bought a Ferrari,
in the owner's name?
In the owner's name with the social security number.
Okay, I hate all of this.
I love this.
Okay.
Brings the car to the company, puts it in the parking lot, takes the owner outside and says, this is why we do not want to collect social security numbers from our customers. I just bought that car. You own that. It's yours.
And he's in jail to this day for
identity? He turned the car back in and took it back, and it was all said and done.
Okay.
So but the point is when you have access to,
or the owner was like, I've always wanted a Ferrari.
Yeah, no, well, I actually did have a Ferrari. It was kind of interesting. He did own a Ferrari, so he did at one point have that. But I don't think it was the Ferrari they bought for him. I thought they were, and it honestly could have been the same dealership that he bought the original one from.
Right.
So, but the case was, here's the problem. Sometimes what we're doing here is we're not appreciating either the information we have or we're not using the information correctly.
Right.
So, anyways,
no, and I think that's honestly, I think I think what you're saying is a great challenge to me for how to up my game and how to increase the value that I bring to the owners, because I have to say I'm going to say zero in terms of sexying up I'm more like I think if I were to give a objective view of how of the information I do give to the owners, I'm giving them quantity. It's like, here's all you have,
Information
you have all the data. Well, no,
killing them with kindness.
It's not. Well, it's neither of those. It's more just like going, we had problems in the past. And for me, transparency is you need to be able to see everything. So here is everything. And I could see that. And like you're saying, there are, I would say there's a couple of, there's one report in particular that I create for them that I think is a fantastic report that really shows, cash flow in, out versus what we know very closely what we're going to be collecting every year. And so budgeting is, it's not there's not a lot of guessing in terms of what we have to use for our budget. So showing them stuff like that I think is very good. But at the same time, I don't know if I've taught them how to use it, and I don't know how user friendly those reports are. So yeah, I think walking away from this conversation, probably one of the things I need to look at my business is go, how could I make this stuff more user-friendly to people that I am very well aware of don't have the time to really look line item by line item through all the volumes of information I'm giving them every month.
It's not an illusion to say, look here, while you're misleading them somewhere else, but it is an effort to say, this is something that is attractive. You need to know. You've invested here. Therefore, let me point out how much earnings, or let's say return on investments we've gotten, how much the company's made, how much you've made. The dividends have increased this much.
Yep. And that goes back to the intractable problem. Because again, if you've got someone who is doing something nefarious, but also is giving, it's kind of the, when you think of like financial statement fraud and corporate fraud, you've got the, the filings that people send into the SEC that show all the bad numbers, but then they say, hey, we're gonna make, but here's the stuff that we printed on color paper with all these fancy infographics that are gonna make it look like we're rock stars, when really the information, this is a bastardization of the actual information. So, so the intractable problem, and again, I would still say it's intractable, is you do need if someone's really going to manage their money and really protect themselves from all sorts of fraud and abuse, they really do have to get into the details of the accounting information themselves.
Yeah, there's two things that I have to agree with you. When you're in an ownership role or a leadership role, I think there's a lot of times that we abdicate our responsibilities by saying, you're the financial planner, run my retirement. You're the accountant, take care of my finance. Mm-hmm. All of a sudden what happens is we're trusting the other individual because they're the expert. I'm the surgeon. I'm the expert in the wheelhouse that I'm in. Yeah. I'm paying you to be the expert over here. And there's a lot of trust going on there. Yep. But I have to stress, and it's for me as well, that there is still an accountability that I got to go to that person and at least have them account for what's happening and explain themselves in a way that at least interests me, because I'm paying you to take care of something. As an owner, I can't abdicate that. To simply say I've paid somebody and never meet with them on a weekly, monthly, quarterly, annual basis, I'm the buffoon at that point.
Right. Yeah. I mean, the funny thing is, we on the Oh My Fraud podcast, we joked around a lot about victim blaming, and that's it, and it is funny because we are kind of in that weird space of going, a bad guy did bad things to you and it's your fault.
Oh, I don't want to go there.
Well, no, but the funny thing is, financially, you're kind of right. But at the same time, I think the way that we get through that again is by really looking at every time an owner does abdicate their responsibility to get into and to ask questions until they're fully satisfied that things are working right. Then we go, that whether intentionally or not, that's a choice that they're making to increase the riskiness of their business.
Yes. And as accounting professionals, especially in the CFO seat, I think it's our responsibility to make the numbers interesting.
Yeah.
Our job is to make the business model intriguing, that they're wanting to see not just the day-to-day actions of what the business is doing because they're living it. Right. I want to see the financial numbers that now tell the story that's similar to what I've experienced, and it's got to be interesting. You got to make the book interesting.
Yeah. Yeah, no, and that's very true, and a lot of and I know that comes from conversations. I mean, again, if I was in an actual like fractional CFO firm, if that's what I owned, is that I would be having conversations with my different clients, saying to make sure that I knew what they needed to know and how they needed that communicated to them, and from since I didn't have to gain these. I mean, again, it's weird thinking I have 4 clients that are these different companies. That conversation's never been had. I just walked in and they were, and the expectation was for me just to do the accounting, make it happen, make it right,
Make it legal.
yeah, make it legal,
Compliant.
make it right, make sure that we're not getting screwed, and do that job. But yeah, the conversation in terms of how is this best communicated, that's a conversation. Like I said, since I didn't garner these clients, I just walked in as an employee who kind of gained responsibility over years. That conversation never was had.
Yeah. All right. So you brought up Oh My Fraud. It was a
Yeah.
podcast that you co-hosted. It
Yeah.
was one that you did for a period of time.
Yep.
I'm curious, not the greatest stories. What's an important lesson you learned from that as accounting professionals that we should understand and implement with our clients?
Internal controls are wildly important, and specific. I mean, I'd say the biggest lesson was, even if you have a teeny tiny company, you have to have separation of duties. And again, even looking back at my former boss, even though this didn't work, it saved the reason I'm convinced he's not in jail, because he never signed a check to himself.
Yeah.
If that makes sense.
Uh-huh.
So, but that didn't help the company, that helped him. So if you have different, but also, I mean, ultimately the way that his fraud was detected and was ended and was resolved the way it was because there were separate. I came in as this separate function going, oh, here's exactly what's happening with this. This needs to be, I'm not okay with this. This needs, so that separation of duties, you have, what the basic things are: who has physical control of the assets, who has authorization duties for those assets, and who has reconciliation responsibilities. And having those 3 things, if you've got those, you're going to avoid a whole lot of frauds just by.
All right,
having
explain those 3 things real simply then.
Okay, so real simply, and I'll use the example we've just been talking about with my old boss, and how this was detected. He had the physical control of the assets. So he and his wife were the ones who would request and print checks to be signed. That's physical control of the actual assets. Then the doctors were the ones who would sign them. He couldn't sign his own check.
Yep.
So the doctors had the authorization portion of that. And then I had the reconciliation portion, where I was looking at and going, oh, wait a second. He was only supposed to get $144,000 this year, and he had $216,000 this year. So that reconciliation side, because if that went back to him, he'd just be like, okay, cool, no big deal. But since it was from a third person, that's how the whole thing was like, this is not sustainable.
And helpful to that reconciliation is having in writing what the terms are.
Well, but also the reconciliation portion is like, hey, we don't have this in writing.
Yes.
So that's I would say that's also part of it's. I mean, not so much an accounting reconciliation, more of a legal reconciliation of that. Because again, I knew there were some handshake agreements that were involved, and that's how I was doing my accounting. But yeah, also being able to say, we're very exposed because of this.
Well, one of the simple things that I've always said, and it's in my own business, but it's the fact that we don't write blank we just don't write people checks. I need an invoice. I need something that says why I owe you what it is.
Yes.
And I need to have a paper trail that simply says, if this check went out, if this payment was sent, why?
Right.
And I need something on the back end to account for it, and I need to be able to understand what that is. And so often it's a generic thing that doesn't make sense to some, benign company. I'm like, okay, tell me what this is. I don't understand what this is for, and that's very important. And if you've got that triangle as you're describing it, the assets, you've got the signatory, you've got the person reconciling. That right there seems like a good thing to implement to at least mitigate more fully the idea of fraud.
Yes.
Yeah.
For sure.
Okay, I like this. This is good.
Yeah.
So, Oh My Fraud, that was something that you were involved in. What was exciting about that?
Just the cases. We had fantastic stories.
Yeah.
Because that's what we sort of got into the fraud podcast because the co-creator and I, Caleb Newquist, which by the way, just for people listening, I have stepped away from the podcast as of the end of 2024, but Caleb, the guy I created the podcast with, he's carrying it into the future. So it's still something that's going on. But when we created that, we had done a whole bunch of fraud webinars together and he was like, there's a podcast here that we could do. and he eventually convinced me to do that podcast with him. And we quickly found out that that what was interesting about the podcast was the actual stories and showing, like, you know, I mean, we really had a process for writing our scripts for because we did write a script for every single episode.
Oh, I didn't know that.
It was a loose. I mean, no, it was
an outline or a script.
It was a script, but at the same time, we would depart from it as needed. But
you would interject.
We would interject, but
Right.
but yeah, there was a lot of actual reading of because that's one of the things.
You're doing a lot of facts.
There's so many facts that you have to have in there: names, dates, amounts, all sorts of different things. So we would write a literal script for that, but we found that we had to write the script in the same way that you would basically write a movie script, where it's like you had to have like a once upon a time, and then until one day, and then because of that, and then eventually and you had to really develop an actual story arc for these stories. But and it was one of the reasons why it was such a labor intensive podcast is that we would have to find that story from all sorts of different articles over time. So it wasn't just like, here's the story.
There's not a single source.
Yeah,
you had to do your research.
Yeah, and so often we would find, like, I would read an article about a particular fraud case and go, that's great, but this article left out this and this piece of information I want to know, and this piece of information I want to know, and just all these things. So then you have to keep researching all these things, and so often it's like, I don't know what this whole story is because I'm missing too many pieces. And then one day you finally get that missing article, and you go, now it makes sense. Now I know how, because of that. Now this all it's just a story arc from, here's a guy who started out at this company and he was just a knucklehead, and then he found out, he charged. Well, this was the Roslyn School District. The superintendent stole millions of dollars, and it all started because he bought a bagel at a bagel place and accidentally used the school district card instead of his personal card, and he was just sitting around going, yeah, someday somebody's going to come and say, hey, you need to write a check for that bagel, and nobody did it, and that. From a $4 bagel to an $11 million fraud. That's the story that I want to see, is how did that happen, and how are you justifying that, and and who's involved and who's not involved, and all that. So I mean, that's what was fascinating about that podcast is just how these stories would unfold, and we really liked the psychology behind the what were they thinking? How were they justifying what they were doing or not? And what was their motivations? All that sort of stuff.
Yeah,
so interesting.
So two things. One, it's basically true crime for accounting professionals.
Yeah, exactly.
If you like true crime, accounting professionals with the numbers, there you go.
Yep.
So that's good. The second thing is it's definitely getting into the why did they do it kind of thing.
Yeah.
How did they justify it? But more importantly, why did they feel like they were owed it?
Right. Exactly.
How did they get to the point where they all of a sudden said, I'm justifying this because I'm owed this?
Right.
What in the world?
There's rational. I mean, that you look at it's the fraud triangle thing where it's like opportunity, pressure, and rationalization. And one of the things that there was a few things that we really dug into with that, and that was that pressure. That's an interesting leg of the triangle.
Yeah.
Because pressure's never gone. Because the pressure could be as little as more money is better than less money. So now there's that versus I'm a gambling addict and someone's going to come and break my kneecaps if I don't pay. So pressure can obviously vary. There's a huge range, but I'm going to say pressure's never gone. Rationalization, same thing. You can try to minimize rationalization, but human beings have a way of rationalizing their behavior. Back to the Roslyn School District case with him, he this is a quote from him where he would say, I am in charge of a school district with a $9 million annual budget. If you look at a CEO of a company with a $9 million or whatever, I can't remember what his annual budget was, but he compared it to CEOs who have companies of the similar size. He's like, I am making a fraction of what a CFO would make if they were in a similar circumstance. to me, and that was his rationalization for stealing the money.
Yeah, you just nailed it.
Yeah. So that's that, and you know, and we love to pick that apart. And it's like, so then you should have gone into business. That's if you wanted that. Don't become a public servant.
Exactly.
Yeah. I mean, everybody knows education's not where you make the big money. If you wanted the big money, go into the field that makes the big money. Yeah. So that's the counterpoint to his rationalization, but at the same time, nobody's making that counterpoint to him.
Yeah.
The other fun thing that we would often explore was because one of the big red flag behaviors for fraud is an extravagant lifestyle. And so you'd have these people who were stealing gobs and gobs of money and spending it like drunk sailors, and they would have to explain where this money came from to people around them. And very often the explanation, like there's a great case that we had about Corsica, Texas. It was a fruitcake bakery, Collins Street Bakery. That was the name of the bakery.
Okay.
So they're famous for fruitcakes of all things. And you go, who buys fruitcakes? And apparently enough people to keep Collins Street Bakery a very profitable company. This guy stole millions of dollars from this bakery. And he was just basically a controller for this company, and he was spending millions. He was taking friends on private jet vacations to different places, and they're like, "How do you have all this money?" And especially in that area of Texas, there's a lot of people with generational oil wealth. So he was like, "So I've got this, I got a family money that lets me do that." And people are like, okay. And it's like, and the funny thing is whatever the first explanation is for the fancy lifestyle, no one ever asks follow-up questions. They're like, oh, big inheritance, cool, good on you. There was another guy, one of my favorite fraud cases. His explanation, he kept his wife out of the he stole $8 million from ING. That was the insurance company he worked for, which was also funny because you go, $8 million is tons of money. ING, that's immaterial for ING.
It's a rounding error.
And that's actually how he hid it. He hid his fraud because he was in charge of foreign currency exchange transactions. And so he would just round it down by a penny for all these. And that's how he hid his fraud was foreign currency exchange, which again, impressive, but anyways, he stole his money, didn't tell his wife where the money, didn't tell his wife that he was stealing the money. He had to give an explanation to his wife of where they were getting all the money from, and he said he was really, really good at slot machines.
What?
And it's like, how in the world? No one's really good at slot. But what he would do, this was fascinating. He would very interesting. We actually got to interview this guy on the show, the guy who committed the fraud.
Okay.
On the show. And he said that his first big purchase was a Harley Davidson for like $40,000, something like that. So what he would do is he would go to Las Vegas and he would gamble enough money to where they would give him a W-2G, the gambling W-2 for your winnings, for that was enough money to show that he won money for the motorcycle. Now, those W-2Gs, because you know what I'm talking about, right?
I'm following you, but not very well. Because if I'm going to go down to Vegas and throw money into gambling so that I can get a W-2G to show I had enough winnings to cover how much did I lose?
Exactly. That's the thing. He said that he lost $6 million of his $8 million gambling
to get a $40,000 W-2G.
To get a W-2 so that he could show his wife that he's actually really good at slot machines. That's what.
So this is what I'm imagining right now.
Yeah.
I'm imagining Breaking Bad with this scenario where in Breaking Bad, Walter has both 55-gallon drums, or he's got storage units full of money, but he can't spend it because he has no way to justify the cash.
Exactly.
So he opens up a car wash so that he can actually launder the funds through the car wash.
Right. And this was his way of laundering the money.
He was going down to Vegas
and losing ridiculous amounts of money so that he could come home with a W-2G to say, it's okay, I just bought an Audi, but I won this much money.
So what
Vegas.
he should have done is opened up a mattress store so that he could have a mattress store next to a mattress store so that he could launder launders money. That's exactly what it is.
Yeah.
Yeah,
So-
go look up the conspiracy theories about mattress stores on YouTube.
Okay, I will. When I'm homesick one day, I'll spend.
There
the day
you go.
doing
There
that.
you go.
Yeah.
This is so fun. No,
Yeah.
we're all over the place on this. And one of the things that I want to do is this triangle that we're talking about, the fraud triangle.
Yeah.
Very important to understand. I think it's very relevant to what we've talked about as it relates to, as accounting professionals, being a little bit more transparent with the clients that we're servicing.
Yeah.
So I'm liking this. Here's where I want to go now on a personal note. Let's turn this personal.
Okay.
So all of a sudden, we talked about at the beginning, comedy. You do cartoons or did cartoons.
I did. Yeah. Yep. Did cartoons.
So you're an illustrator.
Yes.
Okay.
Not good.
Well, you don't have to use the word good. I mean,
Look at there's plenty of cartoons out there where the art isn't the
strength.
The strength. Exactly.
There you go. Okay. So you got the cartoons with that, but I also know that you're involved with some, I would dare say, ministry. Is that a fair term?
No.
You're not involved in a ministry?
No, I'm not.
So earlier, I understood that you were involved in some faith activities.
No, I do. I have a comedy show called Comedy Church.
Oh, is that what it is?
Yes, and it's
So
just
it's
a
just
comedy
part of your
show.
routine.
Which is so funny.
Interesting.
That you had that misconception, because at the beginning of every show, we actually have a disclaimer where you're like, if you came to this show thinking that this was an actual religious service, you need to leave like right now, because you're going to be so disappointed and feel so
I am so glad you
uncomfortable.
clarified that, because earlier when you made that comment, you said that you and your partner are actually, and I was thinking, okay, this is a ministry going on, but it's just a comedic routine.
Just a comedic routine. Yeah. So I used to be a very, very active, committed evangelical Christian.
Yeah.
And
that was the way you set that up. By the way.
And my buddy was a returned missionary LDS fella. Both of us have since stopped going to church, but we both do stand-up comedy. So we do this comedy show and it's funny. I mean, it's a great show. I love it. We actually started it in 2018. It's been going on ever since then. So we're this fall we'll hit 7 years of doing this
routine,
this show that we do local. So we've developed 22 different shows. So we do a show on the first and third Sundays of the month. We take a couple of weeks off around the holidays because everybody's too busy. But yeah, we developed 22 different shows, so we don't have to repeat the same show twice in the same calendar year. So it's a local show. We have people that show up. We have regulars that come to our. But it's this. I feel like it's the sweet point, because we would both consider ourselves atheists right now.
Okay.
But but a lot of people think of like stand-up comedy and atheists and think of like Ricky Gervais, who's very, very like biting and
he's harsh.
That's right. But us, it's not that at all. Where not that we don't have criticisms of our former faiths that we had, but the biggest thing is we look at what because we can't say that people who were religious are idiots, because we were both super committed in the faith traditions that we were in. So if we were like, if you believe this stuff, you're an idiot, we're like going, we're the biggest idiots because we believed it more than any. So it's not that at all, but it's looking at just sort of what we did and what we believed and how we justified it and how we kind of talked our way through things that seemed like, things that eventually were like, I don't know if I can believe this anymore. But for a long time, we still stayed in it and did it. So it's a very, very personal look at faith and belief and what that really is. And some of the best compliments we have is when people who are currently like religious people come to our show, and at the end they go, that was wonderful, because, and they're like, oh, and everybody needs to watch this because you guys are just being very, very real about a lot of issues that everybody sees and understands and feels at some point, even if they're not, even if they're coming to different conclusions than you are. This is still like the real meat and potatoes of a lot of faith is what it is. So that's sort of how the show is built, is from that. So,
interesting.
Yeah.
Well,
I used to be in the ministry. So I was the worship leader at my church down in Orem for 2 or 3 years while I was down there. Did a lot of college ministry and a lot of youth ministry as well.
Very good. Okay.
Back in my day. So
all right. Well, yeah. I appreciate the clarification, because I did not see that going where I thought it was. Yeah. As to the 22 routines that you have.
Yeah.
What kind of topic matters are you covering?
Oh gosh, let's see. The ones we do, we just did a show that was Mysteries of God. We have a show about the second coming. We have a show about we have a show about swearing. show about sex, which is very interesting to tell people to come to our sex show. We have heaven, hell. We have LGBTQ plus themed show. We have witchcraft. We have an annual. Our best attended show is our Christmas show. We have every year at the beginning of December.
Interesting.
Yeah.
So I could have a lot of fun with each of those topics. When you said LGBTQ plus, I was thinking plus size.
Oh no.
So it's plus size people. Anyway,
thin people who are
there you go.
LGBTQ and people who are larger.
So that was kind of funny. And then as it relates to swearing is one that I actually have a lot of conversations with because I personally don't swear.
Oh, okay.
And so because of that, I have a lot of people that are interested in the topic. And so I've had this dialogue with friends, family, and so forth.
Yeah.
You know, what is swearing and how does swearing evolve? How has it evolved over the years? Why is something profane?
Right.
How can a word be something that is offensive? And so you start going down that path of talking about what is a swear word. Typically, it's just the manipulation of a word that has an actual meaning. It has a place in vocabulary. It's just been repurposed in a way that's offensive.
Right.
And so swearing is a fascinating conversation
it is.
At an intellectual level.
It's very fascinating. I was just listening to a podcast about cryptocurrency, and I feel that swearing is very similar to cryptocurrency or currency in general.
Okay.
Where it's like this word has power because somehow as a society we have given it power.
Oh yes.
If that makes sense.
Yes.
And not but just like currency has real value, and those words have real power, even though it's just a word. So it is. It's an incredibly fascinating topic.
Yeah. So if I remember correctly, there is actually kind of like a docu-series, a mini-series that's on Netflix about swearing.
Yes. Is it? I think doesn't Nick Cage host that?
I can't remember who it is.
I want to say maybe I'm thinking something else, but yeah. And there's a book I haven't read the entire thing. It's just called The F Word, which is it's a academic review of the history of swearing and what swearing is and why it is. And
I think that's a topic in and of itself that's quite fascinating.
Well, and we were talking about sexying up our financial reports to owners. One of the studies that I've seen a number of times is that swearing in a professional setting is a way of building trust with other people. Where if I swear around you, something that's not a word that just is not expected to be used in a professional setting. The way what I'm communicating to you is that I trust you enough to be able to get into this place that I'm probably not supposed to get into. So there's some weird interpersonal dynamics that come from using swearing even in a professional setting. And again, can garner interest, but again, you got to know your audience as well. And as a couple guys who live in Utah, our audience is often not gonna respond well to that.
As to swearing in the workplace, fascinating conversation here because I have had a discussion with some people about it, and it typically goes back to a power play. And it also typically stems from an insecurity that you're trying to position yourself as someone that has more power than you typically feel you do.
Okay.
Because you're trying to say, I'm not threatened by you. So I'm going to show some bravado and say words that strike or garner attention.
So kind of drop the F-bomb, what are you going to do?
Yeah.
Okay.
So it's a power play and it's a posturing type thing.
Okay.
Because it's more of a reflection of insecurity.
Okay.
Now, I'm not referring to I'm upset, the company's doing poorly, you guys messed up, what the heck's going on here? And as an owner, I'm frustrated and mad. I'm not talking about that swearing. I'm talking about just adjectives within sentences.
Casual use of
terms. It's a power play. It's an insecurity that you're using to leverage your position in the room.
Gotcha.
Because you're trying to get everyone's attention.
Right.
So So it's actually more of a demonstration of insecurity.
Right. Well, and also because there's I'm sure you're familiar with these studies as well that typically are aligned with selling products. Where if I'm an expert salesperson, I'm going to be watching not just your mannerisms but the words that you use, and I'm going to reflect those words back to you.
Correct.
Because if we're using the same mannerisms and the same words, then that says it's kind of
a technique called mirroring.
Yeah, it's mirroring, exactly. The goal of mirroring is to develop trust, to go, hey, you and me,
we're in common.
We're a lot alike.
Yes.
And so because of that, because we're so much alike, you you trust me and you like me because look at us. We're both bald, got glasses, and got beards. That's why we feel like brothers. And I dropped the swear word earlier. Now I'm realizing I shouldn't have. And that's where I don't remember it, so you're good. I broke the trust.
No, I don't remember it. You're good.
But I think with there's kind of the flip side of mirroring. I think where you're kind of going, hey, I'm gonna put this out there. And I'm going to see what you do with it.
Mm-hmm.
That's part of, which I think is very similar to what you're saying. Is you're saying more from a bravado kind of thing of like it's a power play. I'm going to show that I have a higher status than you do by feeling more free to drop swear words in a casual conversation. I could also see it as saying, hey, I'm trying to build I'm using this interesting way of building rapport with you as well. So basically I said, when I'm sending out my financial reports, I need to include as many swear words as I can because that's really going to make people pay attention to the financial reports.
We did effing great this month.
We did effing, okay, funny story. I work a lot with contracts with my job. And if anyone ever, well, not anyone ever, from time to time, if someone sends me a contract for me to review and they send it in Word format, I will often go somewhere deep into the boilerplate and I will change a sentence to include some horrible swear word just to...
Because it's in a Word document, you can edit it.
Yeah, because I can. If you send it to me in PDF, I don't have PDF editing skills like that. But in a Word document, I will do that and I will then approve the document and I will sign it. And I just want to see if you ever find it. And no one ever does.
That's funny.
It's a good time.
All right, I've got some quick questions to kind of wrap this up.
Yeah.
As I go through these are rapid fire, so you just got to pick them, all right?
Okay.
So first one, Star Wars or Star Trek?
Star Wars. Love them both, but Star Wars.
Star Wars. Money or fame?
Ooh, money.
Read a book or watch a movie?
Gosh, these are hard. Watch a movie.
Introvert or extrovert?
Ambivert.
Ambivert.
No, for real.
Okay.
Listen, I'm a comedian who's a CPA.
Right.
I'm on both ends of the spectrum.
So you're on the spectrum.
Yeah, I am definitely on the spectrum. Yeah.
Good.
Yeah.
Disneyland or Disney World?
Oh, Disneyland.
Drive or fly?
A drive.
Breakfast or dinner?
Breakfast.
I love this. This is awesome.
Yeah.
Favorite place to go on a vacation?
Oh, Hawaii.
Hawaii.
Yeah,
nice.
got a little condo on the Big
beautiful.
Island. Yeah, and I daydream about being out there on a daily basis.
Okay, very good. Favorite place to live if you could?
Hawaii. Hawaii.
Really?
To retire and relocate to Hawaii, or maybe even not retire and relocate to Hawaii. So much that you can do virtually these days.
I've got something on that, but I won't bring it up here. All right, personal. What's the thing that people most misunderstand about you?
Most misunderstand. Oh, well, we
that you run a ministry.
That I run a ministry. No, that I struggle with anxiety.
Oh,
like to a pretty massive extent.
Yeah, we talked about this offline. It was the idea of mental health and how to cope with it.
Yeah.
What can you share about that?
Well, in terms of people not because what was the question? What do people misunderstand about me?
What do people most misunderstand about you?
because when I do share that, they're like, you don't present as someone who struggles with anxiety, and I also struggle with depression. Depression is triggered by anxiety. When I get too overwhelmed with my anxiety, then the depression comes kicking in, and people are just like, you don't seem like a sad or anxious person, but that's something that I deal with on a daily basis, and that I have to do a lot to manage with. And that was the impetus for me stepping away from the podcast. I was super proud of the product that we had. I loved the guy I was doing it with. Like I said, the cases were just fascinating.
Correct.
The workload was way too much, and so I just felt like one of the things, and I wasn't making any progress with managing my anxiety. So I was like, well, one thing I can do is just do less that requires,
that's good advice.
That requires my effort. So I took that off my plate, and I wasn't expecting it to have quite as big of an impact as it's had, but just in the month, I guess it's just been barely over a month since I stepped away from it. feeling so much better.
Perfect.
So,
Perfect. Now, I'm going to be very stereotypical right here, so I'm going to ask your impression of what I'm about to say.
Okay.
It doesn't strike me odd that you are anxious or have struggled with depression, because it's stereotypical to say that comedians struggle with their demons, and they see life in a comedic way because of the struggles that they face dealing with life.
Yes, and I think that there is some truth to that. I would think, yes, because
it's a coping mechanism.
It's absolutely a coping mechanism, and I know that I'm able to defuse a lot of difficult situations through humor, and I think that's how it developed, how my comedic sensibilities were developed. I would say that that's part of it. I would also say a part of it is that comedians are people who are much more willing to talk about their mental health than a lot of other people as well. You're on stage. You
have to be vulnerable.
Here's the thing. No one laughs. I bought a house. I refinished my hardwood floors in my house. I had a joke about refinishing my hardwood floors after purchasing a home. It was a pretty good joke. Everybody hated it because they're like, oh, I guess this comedian's doing pretty. There's no comedy in everything going. Everything went good for Greg. That's not a good joke. But the self-deprecating stuff, that's a very much a go-to for every single comedian. And what are some things that I could joke around about myself? My depression, my anxiety. It's when I start showing you the things that most people hide. So yes, you're right. A lot of comedians deal with more demons than other people, but I think probably my take is even more so comedians are more open with the demons that they have.
Well, going back to the more, let's say the Middle Ages, that's the point of the jester. The jester was actually the comic in the court because they would self-deprecate.
Yeah.
They would make fun of themselves. I'm the fool, right?
Yeah. Yep.
And you're taking things and being flippant with them as a coping mechanism. So anyways, it's kind of stereotypical, but I'm sorry that you have those things, but it's good that you're addressing them. And taking more off of your plate makes sense.
Yep,
that
for
is
sure.
very good.
Yeah,
So
it's a weird thing I'm dealing with my therapist is that because we talk about like dialing back your anxiety and your depression and finding ways where you're okay with not having as high a standards as because I know that's where my anxiety comes from. Is I have incredibly high standards for what I produce.
Okay.
And so a lot of it is like, where can you have lower standards? And for me, I never reduced the standards that I have. It was because it's like a diet. Like think about a volume knob. So I think ideally what you should be doing with your anxiety is dialing it back to where you just aren't putting as much pressure on yourself. So think of like a stereo with a volume knob. You want to turn the volume down. I didn't turn the volume down. I just unplugged one of the speakers is what I did, which still has the result of making this deafening sound more tolerable. But at the same time, I don't think it's the way to get to the heart of the problem, if that makes sense.
It does.
So taking things off your plate, I like I said, I'm reaping the benefits of that, but also I don't think that's getting to the heart of what anxiety is really all about.
Yeah, I think your illustration there is very helpful because you've demonstrated that volume knob is something that has to be turned, not the unplugging of the speaker.
Yeah.
You've got to turn down your expectations and manage them a little bit better.
And it's difficult because now I'm going, oh, hey, this is where I'm at now is much more livable. But I also go, if you want to talk about demons in the closet, I go that I still need to make sure that I'm paying attention to that and attending to that and trying to, manage that as well.
Very good, very good. Well, I appreciate your openness on that.
Yeah,
so
of
that's
course.
very good.
Of course.
So here's what I'd like to do. I'm going to wrap this up, and as I wrap it up, I'm going to first of all talk about my summary of everything, but I'm going to come back to you for a closing thought.
Okay.
All right. So first of all, with regards to this show, I want to point out that there were a lot of things that we covered that I think are worthwhile. One was the idea of, as a CFO, what is our role? And we talked about various business models. I loved how Greg was able to dive deep into essentially what is his business. I just found that enthralling just from the standpoint of how the monies are moving around and how the The doctors were acquiring basically shares in the building, but they weren't doing it directly in shares. But nonetheless, they had to pay their rent, and all that was just very, very particular and methodical. I like that. But the other thing that I thought was helpful was that fraud triangle that we talked about. Simply, how do you actually take now and avoid problems occurring within business where people are taking advantage of, and more importantly, abusing the system? Well, what can we do? We can obviously have that emphasis on who controls the assets, who's the signatories on there, and who's actually the one that's reviewing everything, who's the one making sure everything's, let's say, documented. That right there was an excellent part of the conversation, just to simply say that there are things that we can put in place as accounting professionals to ensure that we're not being taken advantage of, our clients are not being taken advantage of, and that there's a paper trail. So very important on that front. As it related to just the conversation that we were having, I thought the conversation was very fun and comfortable. I very much enjoyed the swearing discussion. That's something that I find quite interesting. The fact that he was able to be vulnerable as to the fact that he's, with his own anxieties, dialing things back and taking more control over his circumstances, so he's not so anxious and dealing with depression. All of these things, I think, are things that are relevant to us as accounting professionals, and I appreciate Greg coming on the show to share those. As it relates to the sponsor of today's episode, it is Universal Accounting Center. If you'd like more information on how you can actually become a CFO and advisor and implement some of these strategies specifically with your clients or in your business, check out Becoming a Profit and Growth Expert. Becoming a Profit and Growth Expert actually empowers you to have the skills, the abilities to confidently and competently offer these services as, in fact, a CFO and an advisor. So definitely check out Becoming a Profit and Growth Expert. You can go to the episode description and find information there, or visit us by going to universalaccountingschool.com and seeing what it is we have as it relates to CFO and advisory services. Now, with that being said, as a summary, I thought this was a great conversation. But what would you leave as a closing thought?
A couple of them. One, I felt like my biggest takeaway from our conversation was the idea of, as accountants, doing what you can to make sure that the information, transparency plus sexy.
Yeah.
I think that's to put it in a nutshell. We need to have both of those things: broad transparency, but also make it sexy to where your people are going to be.
They want to look.
That they want to look, and that they'll take the time to actually look.
Yeah, we're back in Amsterdam now.
Back in Amsterdam?
Just kidding. All right. So with that being said, let me wrap this up.
Right. A clear window, but also put a naked lady behind it.
That's right.
Okay.
Well,
gotcha.
you said a window and make it sexy.
All right.
It's the red light district.
Yes. All right. I'm with you. I'm
Come on,
you. This
Greg.
guy won't swear, but he'll drop red light district references.
Here we go. All right. So to wrap this up, what I'd like to do is actually just point out a few things. One, if you've liked the episode, definitely subscribe. If you haven't subscribed already, check that subscribe button and actually follow us so that each and every week you get notifications as to when we drop a new episode. As it relates to this episode and others, if you'd like to find out more, go to universalaccounting.com, and in the episode description, you'll see their podcast. We've actually collected a number of highlights that you can go listen as playlists, binge listen those which are actually relevant to your current situation, whether it's marketing, selling, pricing, onboarding clients, tech stacks, mental health, whatever the matter. Go there, binge listen those topics that are relevant to your current situation. Also, I want to invite you to GrowCon. GrowCon is an annual conference for owners of bookkeeping, accounting, and tax businesses. It's a conference we'd love to have you attend. Join us at the conference where we put on the stage the experts, those individuals that we need to be hearing from, so that they can assist us as we're learning to market, offer quality accounting services, and do so efficiently and profitably. In addition to that, you get to meet your peers, those individuals that, like you, are out there offering bookkeeping, accounting, CFO, and related services. You definitely want to be there to actually meet with them, make new friendships, connect with them, and perhaps even collaborate to better service your clients. And then admittedly, come meet us here at Universal Accounting Center, those individuals on my staff that are committed to actually helping you be in business for yourself, but not by yourself with Universal Accounting. If you're interested in these services, other training programs that we offer, providing training to your staff so that you can offer these quality accounting services to your clients competently, definitely reach out to us, and more importantly, visit us by going to universalaccountingschool.com or give us a phone call at 801-265-3777. And always remember this: if it's about accounting, it is universal. Take care and be safe out there.